Gold is surging and tumbling in ways the world hasn't witnessed for decades. Every wild swing in its price isn't just noise. It's the echo of crises past and warning signals for our financial future. Could today's gold volatility be the final proof that history is about to repeat itself? Step into ancient Rome, where gold was power, and panic erupted whenever coins lost value. Volatility wasn't abstract. It meant chaos in the streets. What feels like uncertainty today was the norm then. Every price jump, every collapse foreshadowed real danger. These same wild moves haunt us now, as investors watch gold spike and crash within hours. Is history whispering or shouting? Across centuries, gold's price rarely sat still. In year 1792, when the United States defined its currency by gold, volatility followed every war, every economic shock. The British Empire learned this the hard way, as gold reserves buckled under the strain of global conflict. Every erratic swing had roots in political upheaval and currency panic. Today, each shock ripples into gold's price, reflecting fear, hope, and unresolved fractures in the system. Why does gold rally wildly when central banks print money, then tumble as narratives of stability surface? In ancient Rome, currency debasement led to sharp moves in gold's value. Fast forward to Germany, year 1923. Inflation exploded, trust evaporated, and gold moved at breakneck speed. Today, digital markets exaggerate these swings, but the root cause never changes: collapsing confidence, systemic risk, and inflation fears. Gold's volatility is more than numbers. It's the measure of collective anxiety. In times of stability, gold rests quietly. Add instability, political strife, war, currency failure, and every investor runs for cover, triggering wild surges. When fear subsides, corrections come just as quickly. Each chart hides emotion, memory, and the lessons of collapse, hardwired into human psychology. Look past the headlines as central banks buy and sell gold in secret. Their moves send markets into frenzies. Why such urgency now? In times of high volatility, their actions accelerate swings, acquiring gold when fragility is exposed, dumping it to calm the waters. These shadow plays imply deeper systemic issues than official reports admit. Every shift hints at unresolved threats lingering beneath the surface. The great financial crisis unleashed unprecedented volatility in gold. Central banks began emergency accumulation. Now, as headlines warn of inflation and geopolitical tension, gold's price rockets upwards, only to collapse on promises of stability. Modern volatility is no accident. It's the direct result of unresolved risk, policy contradictions, and renewed fear of collapse. Governments and private players use gold swings strategically. A sudden surge can pressure rivals, signal financial distress, or trigger defensive maneuvers. When sharp drops occur, speculators rush in, old hands wait, and governments re-evaluate their arsenals. Today's volatility is not random. It's a weapon wielded by those who understand the rules. Are you prepared for the next move? Study every cycle. Debt buildup, currency expansion, inflation spike. Gold repeats the pattern. Wild surges, sharp declines, and then a new equilibrium. In year 1971, when the gold peg vanished, volatility exploded, and new winners emerged. In modern times, volatility is amplified by algorithms, instant news, and central bank secrecy. The same setup, the same outcome. Only those who understand history endure. If volatility defines this era, what will signal the moment when gold moves from chaos to clarity? Digital currencies promise stability, yet replicate the patterns gold has lived through for centuries. Governments quietly accumulate while public narratives chase headlines. The real lesson: gold's wild ride today is the echo of every collapse that came before, and the blueprint for what will come next. As gold surges and tumbles, are these moves mere market noise, or warnings carved by history itself? Will you dismiss the signals and anchor your trust in the system, Or will you read volatility as the script of past empires repeating in real time? When tomorrow's crisis erupts, will you see the story foretold in every swing? Or realize too late that gold was the final messenger you ignored?